Well, we made it. If you're watching this, congratulations. You officially survived the 2025 housing market. And honestly, it was kind of weird, wasn't it?
It really was. You know, for the last few years, doing these market updates felt a bit like reading a weather report during a hurricane. It was chaotic. But 2025 wasn't a hurricane. It was more like a very long, very confusing traffic jam on I-25, Zach.
Right? Well, we didn't crash, but we definitely weren't going 80 miles an hour anymore. We saw interest rates drop, yet buyers didn't rush in. We saw inventory rise, but prices barely budged. It was a year that defied a lot of logic and left a lot of people kind of scratching their heads.
Exactly. So today, we aren't just giving you headlines, we're cutting through the noise. We are breaking down the 3 trends that actually define 2025. And more importantly, giving you our 3 bold predictions for 2026 so you can stop guessing and start planning.
For those of you new to the channel, I'm Zach Nelson.
And I'm Kathy Nelson. We are the Nelson team.
For over 55 combined years, we've been helping people buy, sell, and invest right here in the Denver metro area. We've seen the booms, we've seen the busts, and we've seen everything in between.
Our goal in this video isn't just to throw numbers at you, it's to help you understand why they matter, so you can make a smart move this year. Let's dive in, Zach.
Let's start with trend number 1. The market finally got a haircut. Well, just a trim though, not a buzz cut. For the first time in a long time, the median sales price actually dipped. We went from a median of $580,000 down to about $574,000. And so that's about a 1% decrease.
Now, let's talk about why this happened because it's very important. It really comes down to affordability fatigue. Buyers finally hit a wall. For years, we saw buyers stretching their budgets to the absolute max. But in 2025, even though inventory was still relatively tight compared to historical norms, the cost of borrowing money was just too high for buyers to bid prices up, like they did in 2021 or 2022.
Sellers had to get realistic. That 1% drop wasn't a market crash. It was just the market letting out a deep breath and saying, okay, we can't keep going up forever. That's true. So it really was a necessary recalibration.
That brings us to trend number 2. Buyers got their voices back. In 2025, the days of waiving inspections, guaranteeing appraisal gaps, and promising your firstborn child to the seller were officially over. We saw concessions become the norm, sellers buying down rates, covering closing costs, and actually fixing that leaky faucet.
The reason? Competition evaporated. In the crazy years, you might have been competing against 10 or 15 other offers. In 2025, you might have been the only offer. With fewer buyers in the pool, sellers couldn't dictate terms anymore. If a seller wanted to close, they had to come to the negotiating table. It was the year of win-win, or at least the year where buyers didn't have to lose just to get the keys to a house.
And trend number 3 involves the math that didn't quite math. We started 2025 with high rates, but by the end of the year, interest rates had actually decreased by nearly 1%. Well, logic says the market should have exploded with activity, right?
Wrong. Sales remained sluggish, and it was surprisingly quiet.
And here's the why. The lock-in effect is thawing, but it's not melted. We talk about the lock-in effect a lot. People not wanting to trade a 3% mortgage for a higher one. Even though rates dropped in 2025, they didn't drop enough to convince the average homeowner to move unless they absolutely had to. You know, the diapers, diamonds, divorce, or death scenarios.
And for buyers, that 1% rate drop helped. But because home prices only dipped 1%, like was mentioned in trend number 1, the monthly payment was still a massive stretch for most families. The urgency to buy just wasn't there. So enough about the past. What does 2026 have in store? Our first prediction, we are going back to basics. We're forecasting a modest 1 to 3% appreciation in home prices. Why so low? Well, because wages need to catch up, we can't see another 10% jump in prices because people simply can't afford it. The average paycheck, let's be honest, it hasn't really grown as fast as home prices have over the last 5 years, although signs point to wages catching up in 2026. The market is going to pace itself with inflation.
Now, hear us out. This is actually good news. If you are a seller, you'll see gains, but it won't be a lottery ticket. If you're a buyer, prices will rise, but they won't run away from you. It's the Goldilocks zone. Not too hot, not too cold, that we've been waiting for.
Prediction number 2 is the one everyone asks about. We believe interest rates will end 2026 sitting somewhere between 5.75 and 6%.
And here's why we're confident in that. The spread is shrinking. For the last 2 years, the gap between the 10-year Treasury yield and mortgage rates was huge because of economic fear and volatility. Lenders were baking in extra profit to protect themselves.
As the economy stabilizes and inflation data calms down, banks are lowering that fear tax. We don't need the Fed to slash rates to 0 to get to the 5s. We just need the market to stop panicking. We think that stability happens this year. It's a new normal, and buyers are finally starting to accept it.
And finally, prediction number 3. In 2026, pretty gets paid. We are seeing a massive divide opening up between move-in ready homes and fixer-uppers. The gap between those two prices is going to get wider.
The reason is cash flow. Think about it. Because rates are still near 6%, buyers are maxed out on their monthly payments. They're stretching to get into that house. They don't have an extra $50,000 of cash laying around to renovate the kitchen, replace 1990s carpet, or paint the exterior after closing.
If your home is turnkey, I'm talking updated floors, fresh paint, staged well, it will fly off the shelf. We've seen it happen, potentially with multiple offers. If it needs work, it's going to sit. 2026 will be the year when prep work, staging, and condition matter more than they have in a decade.
So here is the bottom line. If 2025 was the year of the correction, 2026 is shaping up to be the year of the connection, connecting the right buyer to the right home at a fair price.
But as you can see, this market is unforgiving if you don't have a strategy. You can't just throw a sign up in the yard and hope for the best. And you can't just write a lowball offer without a plan.
Hey, and you know what? That's where we come in. We've navigated markets much tougher than this one.
Absolutely.
Whether you are looking to sell for top dollar in a beauty contest market where presentation is everything, or you're a buyer trying to navigate these interest rates and find a deal, you need experience on your side.
Don't leave your biggest financial asset to chance. Call us, text us, or send us an email. All our information is in the description below.
Let's sit down, look at your goals, and build a plan that works for your 2026. Thanks for watching, and we'll see you on the next one.
Bye-bye.